Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to Kansas City, Missouri, and talk with the man responsible for putting more than 1,000 bankers behind bars in the 1980s, Professor William K. Black. Bill Black, welcome back to the Keiser Report.
Thank you.
All right, Professor Black, markets around the world are once again in chaos as bank shares around the world tumble. Would things have been different had Eric Holder pursued banking criminals in 2009? Bill Black.
Yes, but things would have been far better if his predecessor, Mukasey, had pursued them. It's a question of you could have prevented the entire crisis. Obviously, what happened in the Obama administration is they decided to declare victory and go home. And so Secretary Geithner has been going around saying that he solved the entire financial crisis for less than it cost to deal with the savings and loan debacle. And of course, this is complete nonsense, and the chickens have come home to roost, and they're being slaughtered as we watch.
Yeah, it seems like the basis for not pursuing the criminals on Wall Street is to make the case that, well, you talk about chickens, that old joke of Woody Allen where he goes to the doctor and says, "Doctor, my brother thinks he's a chicken." The doctor says, "Take these pills," and the brother says, "Wait, you don't understand, we need the eggs." In other words, the joke being that the criminality is what's needed to keep the system functioning. The U.S. has become a kleptocracy. It thrives on the criminality. It thrives on the fraud. Is that too much, or is that correct, Bill Black?
It doesn't thrive. It's the most destructive thing. But what thrives is the CEOs. And this is what the Nobel Prize winner in economics, George Akerlof, and his co-author Paul Romer wrote about it in 1993. And their title pretty much says it all: Looting the Economic Underworld of Bankruptcy for Profit. And what they said, and I'm quoting them, is that this kind of fraud by the CEOs using accounting is a sure thing. So it's a sure thing that the CEOs will get rich. The way they get rich, unfortunately, is by deliberately making bad loans, which create a lot of phony accounting income. So it's also guaranteed that they will ruin the economy. And then the question is, are the prosecutors going to take them on? And we've had two administrations in a row, the Bush and the Obama administration, that have allowed these criminals to operate with near total impunity.
All right, Bill Black, you mentioned the word looting, and anyone who looks at this situation even for 5 minutes can tell that this is a case of looting. And why is it that Obama does he need to look up the word looting in the dictionary? Or what's his problem?
Well, again, it's not unique to Obama. This is the last two administrations, and indeed under the Clinton administration as well, especially near the end, where they passed the Commodities Future Modernization Act to stop all regulation of credit default swaps. These have been three administrations that have adopted policies that in our jargon and criminology are highly criminogenic. That means they will produce epic amounts of fraud. And then you had Attorney General Mukasey under Bush famously refuse to even investigate the major frauds, saying that they were simply the equivalent of, and I'm quoting, white-collar street crime. And then it's revealed in the New York Times that Secretary Geithner intervened to try to prevent even investigations, much less prosecutions, of the largest banks. And so we have this bizarre, incredible concept from Treasury Secretary Geithner, and that is the path to financial stability is to leave the frauds who caused this crisis in control of our largest banks, and then to bail them out, and then to seek political contributions from them.
All right, let's talk about the rating agencies for a second, because during the period when the collateralized debt obligations were created, the securitization, the derivatives explosion during the 2000s, the rating agencies gave AAA ratings to what could be ostensibly referred to as crap. And now suddenly the rating agencies are turning seemingly on the very banks that they were in bed with just a couple of months ago. Has there been a shift in other words, in organized crime? Many times it'll have interscene warfare between the Gambinos and some other crime family. Is the criminality at the rating agencies, have they gone to war with the funds and the U.S. government? Is there an inter-gang war going on?
Oh, there's a great publicity scam going on. What is everybody in the world talking about? Standard & Poor's, right? This is the greatest creation of free publicity in modern financial history. So the stuff that they gave the AAA ratings to was actually referred to in the trade at the time, before it blew up, as toxic waste. And indeed had been referred to that in that phrase for over a decade. The FBI warned in 2004 that there was an epidemic of mortgage fraud, using their words, and predicted that it would cause a financial crisis if it were not stemmed, and nobody thinks it was stemmed. The Mortgage Bankers Association, which is the trade association of the perps, had an anti-fraud unit called MARI, which reported to the entire industry in 2006 the following three things. First, that stated income loans, also called Alt-A, were, and I'm quoting, an open invitation to fraudsters. Second, that the incidence of fraud in these loans was 90%. And third, that therefore these loans deserve the phrase that the banking community used behind closed doors, which was liar's loans. Now add two more facts to this. First, we know both from logic and investigations that it was overwhelmingly the lenders that put the lies in liar's loans. And second, by 2006, roughly 30% of all new mortgage originations in the United States were liar's loans. It's really important to understand something that very few economists understand. They treat as dichotomous. In other words, there are two categories that don't overlap: liar's loans and subprime. That is not true. Subprime loans, by 2006, roughly half of all subprime loans were liar's loans. And that's where we get that overall figure of about 30% of total mortgage originations in 2006 were liar's loans. Remember, 90% fraudulent. That means well over 1 million fraudulent loans a year. And after the FBI warning and after the MARI warning, the industry dramatically increased the percentage of liar's loans that it made. That means that when Standard & Poor's, Moody's, and Fitch were giving AAA ratings on the collateralized debt obligations, that the CDOs were primarily backed by fraudulent mortgages. Something that S&P, Fitch, and Moody's were all warned about. And so they all deliberately adopted the financial version of don't ask, don't tell. And there's an infamous S&P memo from 2000 or 2001 in which the poor professional rater asked for the loan files so he can actually review the credit quality of a sample of the loans. So what happens? He gets back a flamegram from his boss in all capitals, triple exclamation point, saying that it is totally outrageous to ask to see the loan files, that the people, the Merrill Lynches of the world, the Lehman Brothers, putting these CDOs together, don't even have the loan files, never looked at the loan quality.
Finally, Bill Block, can you compare the looting going on in the UK with the looting by the bankers?
Yes. When your most elite, most powerful members of society adopt a strategy of what Bastiat, the famous French economist, very conservative, called plundering, then, as he said, they will develop a morality that doesn't simply permit plundering, but valorizes it. And when that happens, the moral structures of the society will inevitably deteriorate. In the upper classes, that leads to polite looting. In the underclasses, it leads to street looting.
So, okay, well, let's follow up on this. In other words, so we've got the looting going on in both strata of society. Now, the public has demanded something like 16,000 police to go into the streets to stop this street looting. Where were they in demanding similar actions to stop the bank looting?
It hasn't happened, and the Obama administration has followed the Bush policies of doing everything possible to prevent the public from targeting what it should be targeted, the elite looters. Obama's famous statement to the big bankers in person was, "I'm the only thing standing between you and the pitchforks." Now, of course, he's not supposed to stand between the elite criminals and the justice system. And none of us want pitchforks, or at least not many of us want pitchforks. We want good old-fashioned prosecutions followed by jail time, just as happened in the savings and loan crisis, where the Justice Department worked with the regulators and achieved more than 1,000 felony convictions, and more than 90% conviction rate. And those are only in cases designated as major by the Justice Department. Almost all of those people were prosecuted. Typically, they were prosecuted successfully. So this was the greatest success against elite white-collar criminals in history, and we can emulate it anytime. And you are absolutely right in your question. If the people will wake up and demand this, demand, as I have, that Holder resign, that he be replaced by a real prosecutor, and this be made a priority, then it will happen.
All right, we'll have to leave it there. Bill Black, thanks so much for being on the Keiser Report.
Thank you, Max.
All right, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I want to thank my guest, Bill Black. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.